All right. Good morning, everybody. Good morning, Ron. You're a man of many names? Yeah, there's a couple. If I'm told that I'm so pretty, it means I'm doing stuff that's not too terribly smart. And if I'm a goofball, I know that I'm in trouble. So it's good to know the code, isn't it? Definitely it's good to know the code. Good morning, everybody. Happy Thursday. Nothing but sunshine. That's today's topic. I'm excited about today. I get excited about every day. Is it just me? Yeah. Good morning, Alex. How are you? Great to see you. Simplicity, guys, that's the word. I'm going to say it every day until it sticks, right? Jose, yes, I did a volume analysis. And let's do that. For those of you guys that have never done it, if you're on 7, and that's what I have open right now. So I'm going to use a market analyzer. And there's a market analyzer on 8 as well. Yeah, Yoda was pretty good, right? So guys, when I make a market analyzer, all I'm doing is I'm looking to see what the volume is. So here's your June contract of crude oil. And then here's your July contract. 3 times, right? Pretty simple. So if you are on NinjaTrader 8, you would have gotten the the notice yesterday. They would have sent you a little pop-up when you open crude that said, hey, crude's going to roll. Do you want to change? Yes or no? I said no because I checked the volume and the volume wasn't there yet. So Jose, on NinjaTrader 7, in order to roll crude, you've got to go to your instrument manager, type in CL, it gives you that future, and just pop it right over to your list. And then once you pop it over to your list, click OK there. Once it shows up in your instrument list, it's really pretty easy. All you have to do is go to your drop-down box right here and go to that 723. And then guys, if you are in NinjaTrader 8, you literally just have to type in that instrument box CL07-23. And it'll pull it right over. There's no instrument manager, nothing like that. And then from the software user guide, good morning, Rain. I'll read that in 1 second. This shows you how to build one of those market analyzers in 8 as well if you're interested. Rain, good morning. And guys, this is one of the things I like about this class so much is people like to share what's making things better for them. So your NT8 wouldn't stop crashing repeatedly. You thought it was a bad chart. Turns out it was related to having the crosshairs turned on. Set it global on each chart so you could easily see the spot where you were on all charts at the same time. Once you turn the crosshairs off on all the charts late last night, after much struggling all day, 8 has been running perfect with only the 3 chart setup. Having your crosshairs turned on and dragging your mouse over your workspace must have been triggering a chart drawing error. Yep, sounds like it. Rain, great detective work there. So guys, there's one more way to help keep it running a little smoother. Thank you for sharing that. It's pretty cool, man. People come in here and they're like, hey, guess what? This made my life better. What do you say I share it with everybody? I think that's pretty awesome that we do that. So guys, we're going to do the same thing that we do every day. We're going to talk about rules. We're going to talk about patterns. And we're going to focus heavily on simplicity, keeping it as simple as possible. I woke up with it on my brain, guys. I was up 4 a.m. Pacific time. And I even created the Keep It Simple plan that I'm going to share with you guys in class. And it's funny because my brother sent me a link to a PDF that he created, and it's almost identical, which is pretty cool. Yoda could be a man, right? He had a beard. He was hairy. I don't know. Maybe not. So guys, first thing we do every day, right? Let's go check the calendar. And let's make sure that there's nothing going on that's going to make that market bump, jump, run, or just be generally untradeable because of maybe a spike or the speed that it creates. Every morning I'm looking for high and I'm looking for medium impact news. Guys, it's not a guaranteed reaction, but it is the potential for a reaction. It's the potential for the market to be a little unpredictable or maybe even too fast to analyze in the moment. So every time I see high impact, I see medium impact, I'm just sitting on my hands and I'm relaxing, going and filling up my coffee, taking my Centrum Silver, whatever. Something other than putting myself in front of that freight train of emotion. Today at 10 a.m., we have existing home sales. It's a medium impact. Guys, write it down on a piece of paper. 10 a.m. Maybe don't jump in front of it just in case that there is a reaction. This morning, there was, the high impact. And when it was all done, the market didn't do much. Whoever was thinking about unemployment claims clearly was out to breakfast and didn't create a reaction. But we knew that it was there. We knew that potential was there. So I do this every morning, guys. I check this and I try to stay on top of it. I have traded into high impact news before, and it has very rarely worked out for me. Every now and then I get a pretty good jump in the right direction. Yeah, it didn't do anything, right? Diddly squat. That's a technical term from Latin, meaning diddlus, meaning very little consequence, a very little consequence, I think. So not much there. You guys, everything that I talk about comes from the education page. And I like to remind you guys that there really are no secrets. If you're brand new to Nexgen, we're not holding anything back from you. We're giving you everything that you need to be successful, giving you the world's greatest elliptical. It is up to you to get on the elliptical and put the miles in. Giving you guys the world's greatest baseball bat, but you've got to learn to swing it. And I'm going to help teach you swing it. But it's going to take a little bit on your part to make sure you get there. And I like to remind people that this is, in fact, your path. Guys, this is a recipe that has been proven, verifiable. Your path to becoming a confident trader ASAP begins with you posting trades in class, giving me your pictures. Every time you take a trade, every time you have a question, every time you're wondering something or you're trying to show me what you did, guys, post a picture in class. And I'm going to post this in here. This is a picture of an annotated chart. And this is my expectation for you guys. I don't have a lot of expectations because, you know what, we're just students, but this is my expectation, guys. Write your rules on your chart. If you tell me that your rules are met, tell me what your rules are. If you told me that you broke a rule, tell me which rule that you broke. And it's not because I can't look at your charts and understand probably exactly what you were thinking, but what this does is this begins to solidify your ability to recognize strong trigger lines and solidify that you're equating it with odds favorable momentum, right? This is making sure that you understand your termination conditions. This is making sure that you know where the proper entry comes from. And then one of the things that I really like to see is tell me how you felt. Were you confident getting into a trade? Were you nervous? Were you anxious? Because a lot of this is very telling. Guys, what you write on a chart becomes very revealing about where you're at with your rules and your understanding of the rules or your willingness to break the rules. One of my favorite things is when people write but on a chart. I didn't have rule number 1 met, but this was going on. Get out of my room, John Novak. Just kidding. Good morning, John. Nice to see you. John likes to post in the traders chat room, guys. That's where the more advanced traders like to hang out, the people that have developed a plan, or sometimes just the people that want to hang out with the people that have a plan. But anyway, there's another trader chat room. That's where John meant to put it. So guys, do me a favor. Annotate your charts, right? Every time you post a trade in class, annotate the charts. So let's have a discussion. I'm available Monday through Friday from 9 a.m. to noon. And my sole purpose in this classroom is to tell you what you did right so that we can reinforce those great habits and tell you what you did wrong so that we can work together to create an understanding and clarity so that we can remedy those bad habits. But if you're not posting, it's difficult for me to know that you need help. The other thing is tracking in the spreadsheet, guys, making sure that you're using the spreadsheet that was provided by Nexgen. And there are 2 pages. There is the front page, which is the copy of your tracking, everything that you do in the room, or everything that you do on your simulator. Post it on this front page, guys, and there's drop-down menus to talk about your rules, how you felt. There's a place to add notes going into it. And then the second page is your personal trade setups, guys. The perfect entry. What's it going to take to get you into a trade? What does it look like? And when those rules are met on a chart, guys, this is your opportunity to put a picture of it in there with the rules written on it so that you can reinforce those great lessons, so that you can make this look easy, because that's the goal, right? So use your spreadsheet. And you know what? I've got a picture of effective spreadsheet use. I made this yesterday because I think people say, well, yeah, I'm using a spreadsheet, and people like to say, you know, I took pictures, but it's imperative that you're doing something with those pictures, that you're doing something with that spreadsheet. So guys, I'm gonna post this in the room for you. Every morning, study the previous day's trades. Did everybody do that today? Did you go back and look at what you did yesterday? And did you look at that short trade into a termination condition that ran you over and say to yourself this morning, hey, I'm not going to trade into termination conditions? Or did you look at that 2 divergence 50-50 that ran you over and say, man, I'm going to avoid that trade? And then hopefully you looked at the one that was perfect, that fit all the rules, that was an easy winner, and you said, this is what I'm going to do, right? So what worked? What didn't? Go through this checklist every day. Look at your trades. Do a little historical study, and it's going to get you in the right mindset. It's going to have you focused on advantages as you come into the day. Guys, that's your path to becoming a confident trader. It's very simple. It's only 2 things: post and track. Post and track, post and track. We're going to spend the first hour learning the trigger line and Fibonacci rules for when it's okay to trade. Your job is to simulate your trades daily, to post pictures in class until you're sure you have the correct rules. Hey, good morning, Marshall. Guys, if you break the rules and win the trades, it's a short-term victory, but it's typically long-term failure. You want it to be repeatable. You want your actions to be verifiable as a situation that creates a statistical advantage. You want to be entering trades that typically win more than they lose, right? Don't practice the wrong trades. Simplify. There's that word again. Simplify. Guys, we're going to focus on a high probability trend trade this morning. That's going to be our focus for the first hour. And then we're also going to talk about a medium probability trade and how to take it most effectively. Guys, 2 trades in your plan. Simple, simple, simple. What are you going to commit to? Well, you have to learn the looks so that they become easy. That comes through repetition. That comes through picture taking. Guys, that comes through filling up your spreadsheet with the absolute best of the best looks every time they present themselves on the chart. After class, before the next day, use market replay. Guys, some of the most seasoned traders I know do 5 to 7 hours of market replay a week at least. I know that my brother, who wrote the software, who created the plans, who trades daily, still does market replay. Every weekend, I get 1,000 pictures from his study, and every weekend we get a little bit smarter. Go back, retrade the days, guys. Fix your mistakes, right? You're going to make mistakes. Allow yourself to make mistakes. You're brand new. Mistakes are how we grow, guys. The body grows under duress, and your brain's going to perceive mistakes as duress. It's all right to make them. I'm giving you permission. Take pictures of the correct trades and present those trades in class, guys. Go, hey, Mark, I did market replay last night. I took 10 trades. I annotated my charts, and there's a couple I had questions on. Here's 4 pictures, not from the live market. Can we talk about them? And I'm going to say absolutely. Let's give you the best feedback that we possibly can. And guys, repeat this process every day until you're always taking the correct trades, because when you take the correct trades, you should be winning more than you're losing. And if you're winning more than you're losing, haven't you guaranteed yourself that you can win? And that's when you go to one of those prop firms, guys. So this is your path. Post a lot. The person that posts the most typically makes the most, gets to where they want to be the quickest. And then, guys, when I go to the tutorial section, I'm trying to kind of slow roll into the day here. I want to point out what we're going to talk about for the first hour, guys. It's a high probability trend trade. A high probability trade is defined when each indicator on every chart agrees with the rules for the trade. This is when your triggers are their strongest. Guys, there's nothing in your way between your entry and your target. Everything on your charts is going to agree for this trade. And this high probability trend trade is a trade that typically wins 70 to 80% of the time, guys. This is a trade that has been back tested, forward tested. It's been done on simulator and in live. And this is a trade that typically wins 70 to 80% of the time. This is your foundation, guys. This is your best of the best. And there's even a section called the first 30 days and beyond. Consistent winning trades. And it's focusing on this high probability trend trade that happens after a termination condition on the 13-2. Guys, this is your holy grail. This is your consistency. This is that foundation that sets you up for growing with the software. And then John adds in, he loves that new spreadsheet look. And he never says love. He's a grumpy old man. Guys, if you use it, it will help you. Monitoring your feelings is really, 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 really important. Confident and patient versus bored and nervous is the difference between pulling the trigger, waiting for targets, or the other thing that sucks. And the other thing is losing. And even though losing is a part of what you do as a day trader, losing because you broke the rules, losing because you're bored, those are unacceptable losses, right? Losing because 70% winners means 30% losers, and it's just a cost of doing business. Focusing on the execution rather than the results, guys, that's what gets you where you want to be. So we're going to focus on this high probability trend trade. For the first hour, we're going to talk about the rules. We're going to focus on what I like to call advantages. Nice, John. You got away from the screen? That's hard to do sometimes, isn't it? John, you told me 2 years ago that when I enter a trade, roll back. Roll back in my chair and get 6 feet away from the monitor so I can't touch anything. Some of the best advice I ever had. Not that we give trading advice. That was brotherly advice. So guys, a trade is just an equation. A trade is a recipe, and it involves 3 things. It involves momentum, a clear path, and an entry area. We're going to talk about each of those advantages. You're going to be able to recognize them. Guys, by the end of your first week, you're going to be able to recognize each of these advantages with a pretty tremendous amount of clarity. The high probability trend trade is 3 rules providing 3 advantages. And I want you to think of it in terms of if a rule provides an advantage, then breaking that rule gives away that advantage, right? You forfeit a momentum, the advantage of momentum, if you don't have strong triggers, and you forfeit a clear path if you're trading in determination conditions, and you forfeit that area where the market is likely to continue if you're not using those entry rules. So guys, 3 rules, and remember, simplicity, 2 charts. Everybody wants to do more. Let's do less today, guys. There's a 13-2 chart. 13-2 chart is your broad stroke of a brush. Gives you the overall look of what the market is doing, guys. This is the large group mentality. 13-2 is going to define direction. It's going to define momentum. It's going to define your areas. Guys, your first 2 rules, your first 2 advantages come from the 13-2 chart. And once those advantages are in place, then you're going to go to your 5-1 chart, guys. This is a smaller, faster chart, and it's nothing more than a refinement chart used for entry. And by using this 5-1 chart, rule number 3, that third advantage of an entry area takes place, and it's going to allow you to reduce your risk, and it's going to allow you to maximize your profit potential. So 2 charts, 3 rules, providing 3 advantages, guys. That's our focus for the first hour. High probability trend trade. The highest probability trend trade that we have, guys. And the reason that I focus so heavily on this high probability trend trade for new users is because it's going to teach you to read your charts. Being able to recognize these advantages comes from your ability to read your charts, guys. And 90% of what you do through the day, and man, that might even be a low percentage, but 90% of what you do during the day is chart reading. And it's waiting for those advantages. And 10% of what you do is going to be actually trading when the advantages are true. Guys, day trading is not a nonstop sport. It is not go, 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 go. Day trading is being patient and waiting for those 3 advantages to come into place. But when you learn how to read your charts, you're going to understand where the market is likely to continue, and you're going to be able to use that point for entries for a high probability trend trade. You're going to be able to recognize where the market is likely to go. And because you recognize where the market is likely to go, it's going to help you develop a management plan that uses momentum, that uses Fibonacci. And then you're going to understand where the market is likely to stop. And that is those termination conditions, right? That's your path, your clear path. And that termination condition where the market is likely to stop, when it actually stops, becomes that amazing anchor for that highest probability trend trade, guys. So we're going to focus on the 3 rules, and we're going to become chart readers. We're going to dedicate the first 30 days with Nexgen to becoming a chart reader, to keeping it simple, to embracing advantages, and putting yourselves in position to take a trade that typically wins 70 to 80% of the time. Chris T, nice to see you in the room. Back for a little bit. I like it. Been traveling for work. Did a couple trend trades yesterday and won. Best trading software available. Thank you for that. I agree. And you got your buddy into it now? Love it. It's like when you finally find your favorite restaurant, you bring all your friends, right? Why wouldn't you? Why wouldn't you? It's good to see you again, man. Hopefully you're at least traveling cool places for work. So guys, let's break down the high probability trend trade. It's 3 rules. Starts with the trigger lines. And you may notice if you see me do this every day, John didn't even put the rules on here, right? We're just going to talk about what is it. Everything starts with trigger lines. And I mean everything starts with trigger lines. Trigger lines are going to define your trend. 2 parts to your triggers, guys. Small triggers, solid lines. Large triggers, dashed lines. Easy peasy. When the small triggers go above the large triggers, no, that's not bad. A lot of good food. That's how I equate travel now, is how's the food where I'm going. That's 3 winners, Chris. Small trigger lines go above the large trigger lines, guys. It paints your background green. You're in an uptrend. When you're in an uptrend, you're only looking for rules to be met for high probability trend trades long, because there's really no reason to fight the trend. Small triggers break below the large triggers. Background paints red. Guys, visually it is instantaneous to recognize what direction the market is trending, to recognize what direction your advantages lie. So using the trigger lines as they cross over just defines the color. Color defines the direction. And then rule number 1 says that we must have strong trigger lines. Strong trigger lines mean in an uptrend, when that background is green, excuse me, that the small trigger lines have broken above the large trigger lines. It's like scissors, wide open, ready to cut. The space created between the small and the large lets you know that the odds are favorable for the market to continue in the direction of the trend. How simple is that? Odds favorable momentum, guys. It's a key phrase that you're going to hear in class. Small's below the large are wide, they're angled in the direction of the trend. Once again, it's that space between the 2, guys. Embrace the space. It rhymes, so you know that it's true. The space between the 2 lets me know that the odds are favorable for the market to continue, right? Odds favorable momentum. You're going to see it annotated on people's charts, OFM, odds favorable momentum. If you let every trade start with those strong trigger lines, well, then you've already taken care of the first one in the equation. Momentum. If the small triggers return to the large triggers, work their way inside, it's a weakening of the large triggers. When you weaken the large triggers, guys, anything can happen up or down. It becomes more of a dice roll than an advantage. Because when you have that odds favorable momentum, guys, this is the most favorable look for buying that pullback on the smaller, faster chart. This is your best look for that entry on a 5-1, guys. And you'll see these tails on a 13-2, these wicks. Each of these wicks represents a potential pullback to an entry point. And you'll notice with that odds favorable momentum, it seems pretty easy for the market to continue in the direction of the trend. I share a lot of pictures during the day, guys. I hope that you're stealing them. And here's rule one. This is my best whole synopsis. And this was crude oil, I believe, one day. You'll notice weak large triggers right before the turning point, right? Losing the advantage of momentum. The market turns, and guys, this is without the benefit of Fibonacci. This is just looking at trigger lines. It creates odds favorable momentum. There's that OFM. There's one of those tails, potential entry, and the market continues up. Anything can happen triggers. The market turns, creating odds favorable. The market continues down. And guys, you see this happen throughout the day, and you'll see these opportunities for entries anywhere from 3 to 10 times a day typically. We're going to get so in tune with them that you never miss them. And then you're going to have these right here, these transition periods. The background is green, but my triggers are red, or maybe the large and the small don't agree. Guys, this is when the market's trying to figure out what it wants to do. One of the amazing advantages of being a Nexgen user is you never have to guess. You never have to predict. You just have to wait for rules to be met, guys. And this is one of those things where people will try to go long. Well, it was green, I went long, but you didn't have momentum. And it was green, I went long again. And this is where people are tempted to predict what the market will do rather than waiting for that rule number one. And it gets traders into positions without the advantage of momentum. Guys, I think of the three advantages, momentum tends to be one of the most advantageous because momentum is hard to stop. So focusing on rule number one. Is everybody comfortable with that? I've got 40 of you in here. I know some of you are new. Guys, odds favorable momentum. Give yourself that advantage, right? I feel good about the world when that momentum is screaming. And then once I have momentum, I have to have a clear path. I have to make sure that termination conditions are false. Guys, termination conditions really are a pretty easy concept to grasp. And it starts first with understanding what the areas are that can be termination conditions. And there's a short list. And for those of you that are brand new, this also serves as a pretty good map for what it is you're looking at your charts. Termination conditions may occur at a divergence high or a divergence low. A divergence high is this magenta line that prints from a pivot when there's a loss of momentum. Divergence is a loss of momentum. You'll see it print magenta from a high pivot. You'll see it print cyan, or that light blue if you're not artsy-fartsy, from a low pivot. It just means that there was a loss of momentum. Guys, divergence printing on its own is not a termination condition. Red Fibonacci resistance, blue Fibonacci support, yellow one-to-ones. These are all areas that may terminate a trend, guys, but there is a two-part recipe. A two-part recipe to determining whether or not you have a clear path. And it starts with price reaching the area. And I'm going to put it in all caps in the room. Price reaches the area, not the trigger lines, right? But the price bars come down to Fibonacci support. When price reaches an area, guys, it's imperative that you ask yourself, where are the trigger lines? If you reach support and the trigger lines remain above that area of support, guys, you've reached an area that may reverse the market. You've lost the advantage of a clear path. Price reaches support, trigger lines above, no short trades. Guys, an area is considered broken when both the small and the large triggers break through. So when both small and large triggers break through this area of support, it begins to behave as resistance, and that clear path is established. And once again, look at that. Odds favorable momentum. There's one of those tails. And off it goes to that next key area. So you either have a clear path or you do not, guys. Small and large through the area, the path is clear. Absolutely no triggers go through, the path is not. Here's one of those examples where the pivot is created with a loss of momentum, right? It gives us that cyan divergence line. This on its own is not a termination condition because price didn't reach this area, price created this area. It's when price comes back to that divergence low line, all of the trigger lines remain above. Now we have a termination condition, guys, and this termination condition is what we call a pivot stop out of a prior divergence line. And this happens quite often, guys, and this termination condition that creates a full reversal is what we call a strong bottom. And you'll also see it from a top. When a pivot stop out creates the full reversal, it's a termination creating the full reversal. That's a strong top. And guys, when it happens in conjunction with Fibonacci, not only did you have those key Fibonacci areas, but also you had that divergence pivot stop out. Very powerful termination condition. Keep your eyes open for these. But this picture reminds us that 90% of what you do during the day is simply reading your charts. Price reaches resistance and none of the trigger lines go through. Textbook termination. It pushes the market down. Price reaches support. Trigger lines don't break through. We can't go long into resistance. We can't go long into or short into support. Ultimately, guys, we get that pivot stop out right there at Fibonacci. It gives me a full reversal. The full reversal gives me odds favorable and a clear path. Now I'm set up for that highest probability trend trade that we teach. You'll also see it from a low. This is a great example that even with the advantage of momentum, we're still giving an awful lot of respect to termination conditions. Price reaches one-to-ones. Absolutely none of the trigger lines break through, even though there's still odds favorable. Look at the bounce. Price reacts to Fibonacci. Guys, when this termination condition gives me a full reversal, this full reversal gives me that odds favorable, that clear path. There's another one of those tails, that best of the best, giving you the opportunity for success early with Nexgen. And guys, sometimes the market turns. You're not going to see it on a larger, slower chart. Maybe you have a clear path and the market appears to turn out of nowhere. There's one more termination condition that I like to talk about. This is a termination condition that happens on the 5-1. It happens on every chart. But you're going to see it on the 5-1 first, guys, and you're going to see it, and it's going to help you identify change. Sorry, I'm harassing my brother on the side. I want him to post these pictures after we talk about the rules, because then you guys can be amazed at how great he did following them. Guys, 3 divergences in the same general location may terminate the trend. What is divergence? Divergence is a loss of momentum. When you have 3 losses of momentum, guys, you've given away that advantage. It may terminate the trend. You'll see it from lows. You'll see it from highs. Those 3 divergences become more powerful when the small triggers work their way inside of the large triggers. Guys, you remember the odds favorable momentum? Anything can happen, and more powerful still when that third pivot is higher from a low or lower from a high. It means that not only are you losing momentum, but now price can't even push to that next key area. Good morning, Debbie. Guys, you're going to see this look at a low or this look at a high. Maybe when that market is turning, not at one of those key areas. So termination conditions, guys. I'm going to share these pictures because it not only shows it visually. Guys, here is your recipe. Price reaches the area. This first picture has a pivot, not a termination condition. But when price retests the area, none of the trigger lines break through. Now it's a termination condition. Resistance, no triggers, termination. One-to-ones and resistance, termination, guys. There it is from a low, or from a high, excuse me. I want to share these from a low. Once again, I've put the recipe on there. Price reaches an area. Price reaches the one-to-ones. Absolutely no trigger lines break through, guys. This termination condition creates a full reversal. There's one of those tails with a clear path, guys. Price reaches support. No triggers break. Termination creates a full reversal. Full reversal gives me odds favorable. Once again, it's a strong bottom. And then finally, we have that pivot, which on its own is not a termination condition. But once price comes back, retest that pivot, it's now a termination condition. Guys, I had to scroll back maybe a day and a half to get all of these pictures because these are patterns that repeat themselves every day, every market, every time frame. Make sure that you recognize them, that you understand the process. There's two pictures showing when it is a termination condition. And guys, here's your pictures for when it is not. When that path is clear, right? All triggers above, the path is clear. All triggers below, the path is clear. Guys, that's about as thorough as I can be on termination conditions. Notice that it only took, what, 6 minutes to talk about it? Keep it simple. Allow it to be simple. Is everybody comfortable? Price reaches an area, absolutely no trigger lines break through. Sit on your hands. Small and large break through an area. Go cat go, right? Here we go. Guys, there's one other scenario that we're going to talk about. This is going to be most users' first medium probability trade. What's a medium probability trade? Because most of you are adrenaline junkies and you don't want to sit still, right? So what's a medium probability trade? It's defined as when most of your indicators line up for a trade. However, a small issue exists. Notice that it says issue, a small issue. It doesn't say several issues. Lots of stuff could go wrong. Take the trade anyway. Guys, a small issue exists. And this is going to be the vast majority of your trades, guys. And when you're executing medium probability trades, you're going to take them and manage them assertively. Your ability to read your charts, the lessons that you're learning on that high probability trade are going to teach you to recognize the issue. It's going to allow you to manage assertively. It's going to have you identifying the trouble in your way. It's going to let you get to break even and take off a portion of your profits. Guys, your first medium probability trade revolves around termination conditions. When your small triggers break through an area with odds favorable momentum, that area has the potential to break. Guys, sometimes people say strong triggers break things. Smalls get above the area, 69.80. Large stay below. Guys, this is an area with the potential to break because of the odds favorable momentum. It is not a clear path. This is your small issue. If you are embracing the 50-50 trade, guys, we call it a 50-50 because the small triggers are above, the large triggers are below. 50% are above, 50% are below. Has nothing to do with a win percentage. It becomes a medium probability trade because the area is not broken, the path is not clear. This is the trade that new users love to take, and this is the trade that new users love to forfeit as many advantages as they can. When you have a 50-50 trade, guys, don't have divergence issues, right? Don't have weak trigger issues. Make sure that it's solid, that it's clear, that it's exactly what you need it to be so that you can have that advantage of a clear path. So you can take that advantage of momentum, guys, and let's define our entry area. This is the part that blows me away. Every day, I talk about it every day. I see it every day. I use it every day. And it still absolutely floors me, the accuracy that you can pinpoint where the market is likely to continue. Guys, on your 5-1, this is your look. When the rules are met on the 13-2, when the momentum is its strongest, when the path is clear, Everything says up, guys. Your trigger lines are up. Your smalls are up. Your large are up. Your bars are up. Your areas are blue. Your mid band is green. Everything is screaming to the upside. And you're sitting there saying to yourself, man, I sure hope it comes back and gets me. Rule number 3 says that you are going to use a limit order, which means that you're going to wait for the market to come to you. And you're going to use a limit order to buy or sell an area. Areas for the high probability trend trade, guys, are really any trend trade. Can be Fibonacci support or resistance, a mid band, or yellow 1-to-1s. But there's a caveat there, is they need to be inside of favorable large triggers. Favorable large triggers are wide in the direction of the trend, guys. Favorable large triggers are strong. They're overlapping, one on top of the other. Two become one, right? And some people would say, but Mark, that's a large and that's a synthetic. Well, synthetic just means that it's a large trigger from a different time frame. They're both large triggers. One's native to the 5-1, your smooth looking trigger. The other one is your 13-2 large trigger. And when these two work harmoniously, it creates the smallest area of opportunity, the smallest point where the market is likely to continue. I always encourage my trend traders to embrace the idea of favorable large triggers. We're going to use them to define that window of opportunity, guys, and you're going to do it when a reversal bar prints. Using a limit order to buy or sell a pullback, just a small retracement in price that's counter to the underlying trend, and we're going to buy the pullback in an uptrend at an area inside of favorable large triggers. So you're going to create a window of opportunity when this reversal bar prints. Your window of opportunity for a long trade extends from the highest point of support to the lowest point of support that fall inside of those favorable large triggers. Sometimes it's 1 tick wide, sometimes it's 10 ticks wide. The tighter the triggers, the more likely you are to have a smaller window of opportunity. Guys, your job is to put a limit order at the top of that window for long trades, to put a limit order at the bottom of that window for short trades. Because of the momentum on the 13-2, because of the clear path on the 13-2, we're not going to trip over pennies to try to save dollars. I'm putting a limit order a tick or two above that highest point of support, that mid band inside of favorable large triggers. And if the market chooses to come back to that window, I'm in a long position. Reversal bar prints. Guys, this is my method for creating a window of opportunity. A lot of users love to use that drawing tool if you want, and you can do it on NinjaTrader in the moment. But if I take from the highest point of my trigger lines to the lowest point of my trigger lines, I've defined my favorable large triggers, and then I'm just going to take the bottom and I'm going to squeeze it up to the lowest point of support, and I'm going to take the top and I'm going to squeeze it down to the highest point of support. And guys, I have defined where the market is likely to continue. I've entered a trade at 79.21 because the advantages are present. The advantage of momentum, the advantage of a clear path, as well as the advantage of an entry area. My initial stop is down here below the window, where the market shouldn't go. If it extends beyond my window of opportunity, I no longer want to be in this trade. It's really plain and simple. Anything that wins 70 to 80% of the time is mathematically obligated to lose 20 to 30. I'm okay with that, but I want to minimize my losses. If the market goes beyond where it's likely to continue, I'm going to exit the trade. But the reality is that with this recipe for success that we've just studied, this is a trade that typically wins 70 to 80% of the time. And then once that market begins to move in the direction of the overall trend, this reversal bar up is printed, I'm going to reduce my risk. I see you guys posting trades in the class with 2, 3 ticks of risk because you're embracing this rule number 3. Because I wait for the pullback, my profit potential grows exponentially, guys. Jumping in early only increases risk. It only reduces profit. It only produces a larger loser if the trade doesn't win. It gives you no advantage. Jumping in late increases risk, right? It reduces profit potential. Your first 20 days, guys, is focused on entries. Your first 20 days is recognizing the advantages on the 13-2, strong triggers, no termination conditions, and then being able to identify, excuse me, the area for entry on the 5-1. So let's go through this one together, guys, and let's annotate this like we took it live and we're sharing it in class. The first thing that I'm looking for is, do I have strong triggers? And guys, if you write out strong triggers, supplement it with OFM. Remember that it means that the odds are favorable for the market to continue in the direction of the trend. Make sure that you're writing in no termination conditions. We haven't reached a divergence high. We haven't reached one-to-ones. We haven't reached resistance. Guys, this is our most current bar, and people tell me all the time, but Mark, I've almost reached a termination condition. You haven't. You've almost reached a target, because remember that we buy a pullback, which means that this 5 ticks turns into 25 ticks almost instantly as the market pulls back to the area of support inside a favorable large trigger. So over here, I want you to write on your chart areas inside of favorable large triggers. Write out the rule, what it means, what you're looking for. Guys, this is your best of the best trade. This is the one. Notice how the top of the triggers to the bottom of the triggers, but that window's coming right here at a stacked area. This picture shows how you're going to be able to study, how you're going to be able to develop trust in this trade, guys. If you go back historically and you see this tail with odds favorable with no termination conditions, you're going to circle it. We don't trade tails because if we do, it's long gone. We trade areas inside of favorable large triggers. If this tail, the circle on the tail, lines up with a rules-based entry, guys, it's your job to take this picture, to share it to screencast, right? Get it up there to that cloud. Open up your spreadsheet. And on your spreadsheet, I want you to put it in there. Create a hyperlink and label it perfect long entry, right? Now I can come back and study what the perfect long entry looks like, and I can try to recreate that each and every day. Things that I like to talk about, don't let that smaller gap freak you out, because remember, we're looking for a pullback and looking to get to the next area. Another thing new users tend to get fearful about, small triggers on your 5-1 may turn against you, guys. Remember, it's a smaller, faster chart. It's a refinement chart. This is where you're going to have to remind yourself that momentum is dictated by the 13-2. And we're okay here. So guys, that's your highest probability trend trade. I like to run through all of the rules. I like to go through. Is everybody comfortable? Do me a favor. Give me a Y in the room if you're with me. We're going to couple odds favorable with momentum. We're going to take that momentum, make sure that there's a clear path. Once there's a clear path, identifying that area where the market is likely to continue. Guys, this is our plan. This is my plan each and every day. This is your first 20 days, guys. If you focus on this for your first 20 days, what you're doing is you're creating an opportunity to recognize a methodology that has been proven to win more than it loses, right? You're giving yourself a foundation for trading success as you grow and expand your knowledge. Guys, price reaches support, absolutely no trigger lines go through. What rule isn't met when this happens, even with odds favorable momentum? New people, help me out. Let's get good at identifying these. Which rule hasn't been met? Anybody? Price reaches an area, absolutely no trigger lines break through. Nobody. That's cool. I know this stuff, guys. Odds favorable, momentum, smalls have broken through, large have not. There's our tail. Guys, look at that tail. It pulls right back to support right there at large triggers. Marshall, I was just asking, what do we have going on here? Termination condition, right? That's it. How easy is that to recognize? Price reaches resistance. Absolutely no trigger lines break through. Termination condition. Price reaches support. Absolutely no trigger lines break through. Guys, do you see how often this happens? Our job is to look for advantages in between the areas that may create a reaction, that may create a bounce. Looking for that odds favorable. Looking for those strong trigger lines. Guys, this is crude oil. Coming over to the S&P, same thing. We're coming off of that resistance. Everything is flying down. Smalls are through the areas, but the large are not, right? It's one of those 50-50 trades. It's a medium probability trade. Notice how the large trigger lines are not one on top of the other. And the market has already shown you 2 losses of momentum as you come into a medium probability trade. Marshall or Shogun, you're either waiting for the areas to break to give you that clear path, or if these areas decide to hold, we're looking for odds favorable momentum the other direction, right? Three divergences in the same location, Bobby? Great look. So what does that mean? That means that it may terminate the trend, correct? And D, you're saying that this is a bottom from nowhere, right? So is that a strong top or a strong bottom? It's not. It's just a pivot in the middle of nowhere. So what does that mean about this 50-50 trade? Guys, we talk about this nearly every day. As you start looking for these medium probability trades, there are looks that are advantageous, there are looks that are not. Pivots that come from the middle of nowhere, guys, this mid-band is your first area. These Fibonacci support. And this 50-50 trade from a bad bottom, something that isn't a strong bottom, tend to work less, tend to shift a little more. That was a small loser after the signal. And guys, it doesn't mean that the market isn't going to continue up. It doesn't guarantee that the market's going to go down. But what it means is that if my small issue is an area that hasn't yet broken, 2 divergences creates another issue, right? Split triggers creates another issue. A third divergence creates another issue. Guys, these medium probability trades, you have to have a different approach to them. And Paul, you said that you took a signal. Is your signal from down here? Yep. So guys, let's talk about medium probability trades real quick. Let's talk about strong bottoms, strong tops. And let's see where this market came from. Look at this, guys. The market came from an area of support with absolutely no trigger lines through it, a strong bottom. And look at what the market did. All the way up to Fibonacci resistance. The trigger lines exceeded, and it pulls back. This is a bad top. And a bad top gives us a 50-50 that tends to not work. The market shuffles and goes all the way up to resistance, and that's where it turns. When you have a bad bottom or a bad top, guys, as you start adding this 50-50 trade into your scenarios, into your trading plan, bad bottoms before a 50-50 drop the likelihood of success. Now you have 2 issues. Bad bottoms on a 50-50 with multiple divergences create even more issues. And this is where the patience piece really comes in, right? That's 3 issues. In my opinion, it's not. But guys, I'm not here to tell you how to trade. I'm not here to tell you what trades to take. What I am here to do is help you identify advantages so that you can make a pragmatic decision on what you're going to do, right? No, Shogun, I like that we do this every now and then. What am I waiting for? That's it. Rules to be met. I don't care about bears. I don't care about bulls. I don't care about anything other than my rules are met, guys. If I have 3 divergences in the same location, it may terminate a trend, right? I'm not looking for a long trade. Not yet. I'm definitely not looking for a short trade. But Shogun, if I say that I'm waiting for shorts, I'm waiting for a bearish move, well, doesn't that get my brain not thinking? Because what if all of this breaks and I'm still looking for shorts, right? So I'm saying what I'm waiting for is odds favorable momentum and a clear path. Does that make sense? Do you see how simple that can be? Hey, Mark. No, the rules never tell you where the market is going. What the rules do, I love that. That was such a great question. You ready? What do the rules do, Shogun? The rules give me advantages, right? Rule number 1, strong triggers, gives me the advantage of momentum. It has 0 reference to which direction the market is trading. Rule number 2 gives me the advantage of a clear path. It has 0 reference to bears and bulls. And rule number 3 gives me an area inside of favorable large triggers. It doesn't say up or down, right? It says that when I have momentum, a clear path, and an entry area, I have advantages in place that typically win more than they lose. So I don't care if this goes up. Yeah. I don't care if it goes down. What I care is that I have those advantages. My most expensive, it really is, Shogun, and we all overthink it, don't we? Our opinions are the most expensive accessories we own. Guys, price reacts to Fibonacci. What you don't see on the 13.2 chart, you can begin to recognize on a 5.1 with all this movement at the Fibonacci areas. Our job is to just wait for the advantages, right? So, man, it's so much more relaxed. If my rules are met, I'll enter the trade. If they're not, no big deal. Okay, guys, so most of you have seen this, right? So Shogun, when do we enter a trade? When the rules are met. This is a high probability trend trade checklist, guys. This is a checklist that reminds you what you're looking for each and every time you get into a trade. Print it out, put it on your desktop, grab the fattest crayon you have, and make sure that you're marking yes, right? Police yourself. Write these rules on the chart. Police yourself. You should never have to ask if it was a trade. All you ever have to ask is, were the rules met? Were my rules met? And then, guys, Shogun, here's one to put on your computer. It's the exact same checklist, but guys, I stole pictures from the resource materials and identified them. What's a good top or bottom? It's a termination condition that creates a full reversal. There's your odds favorable. There's your lesson on terminations. And guys, there's your entries. That's an entire plan in 4 pictures. Simplicity. So I'm going to put that one in the room for you. Just waiting, right? Waiting for the rules to be met. And then, guys, there's one more that I made this morning. Because I can't get you guys to stop taking 50-50 trades. Everybody wants to be a 50-50 day trader, right? I can't wait to get into a medium probability trade. We've all said it. So guys, I created a simple plan for consistency for you guys, that are brand new, for you guys that are looking. This is how you write a trading plan, guys. You're going to need to write your own trading plan at some point. I put this together and I called it the KISS trading plan, the Keep It Simple Sunshine trading plan. My first trade, guys, is the high probability trend trade, right? Here's my checklist. Strong top or bottom. It's not mandatory if the rules are met, but that strong top or bottom is what puts me in that 70 to 80% win category typically. Do I have odds favorable momentum? Do I have no termination conditions? Do I have an area for entry inside of favorable large triggers? Guys, I've defined what it takes to get me into a trade, and then check this out. I put a picture of exactly what a short trade should look like, and I put a picture of exactly what a long trade should look like. So I know that when my rules are met, this is what it should look like, guys. I've defined my entry in words. I've defined it in pictures. And now I need to manage this trade. Great entries create manageable trades, guys. The most mechanical approach is typically the best for new users. It takes out, I am a fan of the band. I'm also a fan of the approach, guys. My initial stop is outside the window of opportunity. And look at this, because I want to know exactly what it looks like. There it is defined. Then 2 ticks above or below the reversal bar in the direction of the trade. Again, I put pictures of my management plan, so it's something that I can repeat every time I take the trade. First contract at 100, go break even on the second. Second contract at 200, I'm looking for $300 per move. Guys, this is your highest probability trend trade. Notice that it takes up less than a half a sheet of paper, right? Here's your 50-50, guys. This is the most ignored rule on a 50-50, or the most ignored advantage. Do you have odds favorable momentum on the 13-2? If you don't, how do you expect an area to break without momentum? Insist on that same momentum on the 5-1, right? And then guys, in the spirit of simplicity, no divergence. Should print, and it should be from a good top or bottom. Enter at the area. Don't worry about confirmations. Don't worry about anything. Give yourself so many advantages that you don't need a third chart to take the trade. So what's a 50-50 trade? A 50-50 trade comes from a strong top or bottom. A 50-50 trade has no divergence and strong triggers. And if it has divergence, there's no trade. And then once again, what's it look like? Smalls below, larger not, no divergence, tiny window of opportunity, right? Strong triggers. Guys, that's the best of the best. What's it look like going the other direction? Smalls are through, the larger not, no divergence, strong triggers, tiny window of opportunity. And then guys, medium probability trades mean that you manage assertively. So your management plan for a high probability trend trade isn't your management plan for a 50-50 trade. This is one of the things you have to realize. So the initial stop, again, outside the window of opportunity, reversal bar, none of that changes. But if divergence prints, guys, my rules aren't met, right? If divergence prints, it's not a trade that I'll take. Therefore, if it prints, I'll exit the trade. That's it. If divergence never prints, my first contract goes at the trouble spot, and then I go break even. I manage assertively. I manage with it in my head that I'm in a medium probability scenario, not a high probability scenario. My second contract is $200. And then guys, I took a trade this morning that fit that. And I want you to see something. 85 wasn't broken. Disregard the divergence. My plan may not be your plan. Because of the strong triggers, because of the strong bottom, because everything's set up on every chart, I entered at the area. My first target wasn't even 10 ticks, guys. It was 8 ticks in. I identified my trouble spot, and I got paid at that trouble spot and went to break even. And whatever happens next is irrelevant. I traded my plan, right? 85, 72.85 is my trouble spot. It's the area that's not broken, right? One small issue exists. And then I took my profits at the trouble spot. But guys, this is my plan, right? And look what happens. A divergence prints, that might have gotten you out. Let your plan dictate your actions, not your emotions. Hashtag keep it simple, silly. I need to change that to sunshine. So guys, first trade, master it. Become great at it. Learn to manage it mechanically. Learn to enter it mechanically. Second trade, insist on perfection of your entry. Stop giving away advantages on medium probability trades. And then as you write your plan, guys, I did this based on a conversation yesterday. Every $1,500, I'm going to add a contract. Every time I triple the margin required, I'm going to add a contract. And then on my third contract, I'm going to develop another management plan. The 13.2 is going to dictate my runner, whether or not I'm going to the next fib or taking it off at 200. And I will always exit with 3 divergences when the smalls are inside. And then each contract after that third, guys, if I'm trading a 10 lot, 7 of them come off at that $200 profit. So guys, this was, you guys don't realize this, but when I'm not in class, I'm thinking about you guys. I'm trying to make your life easier. I really, really do. If you're not winning 60% of your trades, guys, you might want to consider embracing this. I don't give trading advice. That's not my job. My job is to teach you to read indicators. Wait for advantages, right? Keep it simple. The ultimate goal is to get paid, right? So what do we see in the S&P, guys? 50-50, right? Multiple divergences. My rules say don't take it. And if my rules say don't take it, that's my only option, right? Termination into a mid-band, large triggers are full bar away. Now it's a pivot stop out at support, right? Guys, we can literally watch through Fibonacci when the market's possibly winding up for something. Support won't break. Resistance hasn't broken. Shogun, does it matter about bulls or bears, ups or downs? Or are we just waiting for odds favorable momentum and a clear path? Isn't that simple? Doesn't that take the stress out of it? Not having to predict. That's it. Let the indicators tell you. I think is an expensive phrase. I hope is an expensive phrase. My indicators say, takes all the pressure off of you, guys. I like to be pressure free. Guys, overthinking is bad to pursue for now. Overthinking, I do it in everything I do, I think. See, now I'm thinking about it. We're not in control of the market, guys. The only thing that we're in control of is whether or not the rules are met. So that's our first hour. Guys, this is the same first hour, every day. And I do an awful lot of talking in the first hour. True story. The second hour, the third hour, guys, this is where I want to hear your voices. This is where when I ask questions, I hope that you give me answers. This is where when we talk about charts, give me feedback. Tell me what you see. Show me what's going on in your world, in your day trading world. Tell me how your plan's working. Tell me what you need to focus on, what you struggle with, what you want clarity on. And let's have conversations, not lectures, guys. This is not designed to be a lecturing class. This is designed to be a two-way conversation where you get what you need. So help me with that. Guys, I'm going to take a few minutes. When I come back, we're going to start that second hour. I'm going to start looking at the pictures that you guys have posted. If you have questions, please post them in the room. If you have comments, post them in the room. If you have pictures, make sure that they're annotated and post them in the room. I'll be back in just a couple minutes, guys. All right, guys, I'm back. You know what, Rain? I think, and let's clarify. This is two separate thoughts. So let's do this. And you know what? Thank you for bringing that up. Sometimes we got to modify, right? No divergence. Is it from a good top or bottom? Enter at the area. Does that make sense? Yes. All right. So guys, this was done this morning at 4 a.m. That is a great question. No divergence on the 5-1. Uh-oh. Trying to make it look nice. There we go. Yeah, man, always ask, always. So Rain, thank you for that. So let's do it again, guys. 50-50. Odds favorable momentum on the 13-2. Smalls must be outside of the large on the 5-1. No divergence on the 5-1. From a good top or bottom, and let's go ahead and clarify, right? On the 13-2. If you mark yes, enter at the area. If there's divergence, no trade. That's just your little reminder. And then Rain, there's those pictures of them. There's your short entry. Strong triggers, no divergence, enter at the area. And that one's in there as well. So, and guys, this is a great example of how you participating helps, right? So I'm going to click save on that. And then guys, if you stole it when I did it a minute ago, update. Rain, thank you for that. Great questions. Guys, at 4 o'clock in the morning, my brain isn't always working as effective as it should. So thank you for that. All right, this is part of class. We're going to go through and we're going to talk about what you guys have been doing. I always show this. I have to scroll up to find your pictures and then scroll back down to be a part of the conversation. Guys, if you'll do me a favor, if I miss a trade, if I miss a post, if I miss a question, just go, hey, Mark, you missed one. Can you go back and check it out? It was at 8:17. Or, hey, Mark, here's one that we didn't get. Can you cover it for me? And then we'll take care of it. I never miss anything on purpose, but sometimes I miss things. All right, D, you got us started today. And let's see what we have. And notice that D's using the checklist, right? Is the market coming from a good top or bottom? D, not quite. Guys, remember that a good top or bottom is a termination condition that creates a full reversal. And here, the market hasn't quite made it to the key areas, so it's a pivot. There is divergence, but remember, divergence is not a termination condition. It's when price retests divergence and the triggers don't pass through that it is a termination condition. So we're not at a good top or a good bottom, D, but it's not a deal breaker, right? If the rules are still met. Uh-oh. All right, guys, can you hear me now? Did I go through that whole thing on the checklist? Muted? Guys, you got to tell me. If you see this and you don't hear anything, it means that I'm a Yahoo. It means that I'm the... Did you? Man, I came back at 10:12. You guys didn't say anything until 10:17. So let me recap what we did. Guys, a big thank you to Rain for pointing out that the language wasn't clear. There was an amendment, right? Goofball, absolutely. There was an amendment for clarity because your rules should be crystal clear. So I uploaded that new one, and then thank yous to Rain for using his voice, for saying, hey, Mark, this doesn't make sense to me. Will you clarify? And then my job, my goal. All right, we're back again, right? I didn't even touch it, and it muted me. Okay, sorry. Um, so thank you for saying, hey, I don't understand this. Let's talk about it. Man, I might be. That's probably my brother messing with me, going, make them talk. You stop talking. He yells at me via Skype if I talk too long and you guys don't say anything. So, guys, help me not be in trouble. Use your voices a lot. And then we got into D's. So, did everybody catch the lesson? I don't know if I was muted or not. Were we coming from a good top or bottom? Guys, it's not a termination condition that creates a full reversal. That is your clinical definition of a good top or bottom. So D, I would say when we're looking for good tops or bottoms, and guys, this is for everybody, use these pictures that I posted earlier. Price reaches the area, absolutely no trigger lines break through. It has to reach the area and then create a full reversal. So if it hasn't reached the area, it's not a good top or bottom. Is everybody comfortable with that concept? This is an important one. If it's going to be on your checklist, it's imperative that you understand. It has to reach it, right? It has to reach that fib. And then D, if it blows through support and everything gets to the other side, see how it's kind of in between areas? No, D, the cyan wasn't reached. The cyan was created. Does that make... So D, this cyan line doesn't print until like your third bar begins to print. So let's go back to the picture. Absolutely. So cyan and magenta are both included. Man, this is, guys, great question. So D, this is what happened. The pivot has a loss of momentum. That's what creates the magenta line. But D, you don't see this magenta line until price is somewhere all the way down here. This lets me know that there was a loss of momentum. And then it's when price reaches the magenta line and the trigger lines remain below, now it's a termination condition. So the same thing over here, just a pivot, but when price reaches that divergence low, triggers don't break, now it becomes a termination condition. Does that make sense, D? And that really is one of the most common misconceptions with termination conditions. Divergence on its own is not a termination. It's when price retests. No worries. So once again, guys, the more you talk in this classroom, the more clear it becomes. Did you have odds favorable momentum? Absolutely. Small's above the larger wide, angled in the direction of the trend. And then D, let's go back into that recipe for a termination condition. Did you have a termination condition on the 13.2? You absolutely did. You had 1-to-1s at 72.41 that your trigger lines hadn't yet broken through, which means that you didn't have the advantage of a clear path. Does that make sense? Does everybody see how that is? It's not even 50-50 yet. And then when we talk about entries, you did, right? You had an area of support inside of favorable large triggers, but you are trading into the termination condition. So rule number 3 you got. And you think you pulled it too soon? I would say that if you were taking the entry, you pulled it just right. 2 ticks above that area of support inside of favorable large triggers. I love your entry, D. I think it's spot on, perfect. But you did give away the advantage of a clear path. Overall, it's good looking trade. One advantage gone, and then momentum, but just a little bit of patience, right? Waiting for the perfect. Great picture. Thank you for sharing that. And I think we got some good lessons out of it. And guys, that's the goal every day, is you post a picture and hopefully everybody gets a little bit smarter from the picture that you post. So I can't tell you how much I appreciate it when you guys do it. Jose Trades coming in. Let's see what we have, Jose. Can we consider that we are still in a trade area given that price hasn't touched the fib? You can. Jose, let me give you my 2 cents on this. These areas come about through thousands of calculations. And I've got the picture that shows it. I want to show you guys the picture of what it looks like when fibs are being created on your computer. And this is what goes through my head. So guys, if we're 1 tick away, this is my thought process. Is your T3 Fibs Pro Trader, guys, it's analyzing every swing, every pivot, every movement in the market, not only in the current day, but also 10 days behind it, right? It is creating synthetic time frames, higher time frames, lower time frames. It's projecting backwards, it's looking forwards, and it's creating all of these calculations, all of these Fibonacci retracements, all of these Fibonacci projections. And that's sorting them out. It's sorting out which lines are the most important, which prices have the highest concentration, the most important Fibonacci levels. And guys, it does all of these lines. And from all of these lines come these really pretty red and blue lines, right? So this line, Jose, is a multitude of different areas coming together, creating this area. If I'm going to take a trade from 1 tick away, I better be coming from a good bottom. I better have, a strong top. I better have odds favorable. And then for me, notice how you've already got divergence 1 tick below. Your small triggers are working inside. It was coming from a good bottom. But man, and then you've got split trigger lines. And your areas aren't really even inside of the trigger lines anymore. For me, this becomes a tough trade. And I'm not sure what happened. But for me, 1 tick off, I make a judgment call. And in most instances, I'm not taking a trade that's 1 tick off personally in my own trading because I understand how these areas are created, and they are areas. As precise as Fibonacci is, and as amazing as it is, they are areas. So I'm looking at a 50-50 trade that's 1 tick off of resistance, that has divergence, that has weakening triggers, and that has split large triggers. Yep, see how they're apart? Best look is when they're overlapping. They're split, one on top, They've begun to separate, right? Jose, does that make sense? So if I'm trying to make a decision about being 1 tick away, I'm almost going into that same 50-50 mentality. It better be freaking perfect. But this is also a 50-50 that's 1 tick away, that has weak triggers with divergence. The large and the synthetic aren't trending one on top of the other. Only you can make the decision about whether or not you want to respect it. But I think that the 50-50 with divergence, and then man, right there. Does that make sense? Yeah, you took it on sim because of that. What happened? What was the result? Just curious. And it was after a pivot stop. It was after a great bottom, right? It was that pivot stop out at support, that super solid bottom. And then again, Jose, you made 100. Look at your 21.3. That's a bad bottom, right? Into a mid-band, into that resistance, smalls below the large. Like if you're going to have this information, this says that a 50-50 is less likely to work, right? This says that a 50-50. So it's really just a bunch of chart reading. This for me just falls into 50-50 with divergence. It's not a part of my plan. I'm glad you made 100. Your ability to read charts allowed you to manage. And I think that's a key concept, is that great entries create manageable trades. I think that's been said once or twice in here. Thank you for sharing that. And then Joel, let's see what you did, my friend. It's the same trade, right? You're not coming from a good top or bottom. Joel, I feel like you're missing some fibs. You had odds favorable. It's a 50-50. You had no divergence. You had a perfect entry. You took quick profits and you got to break even. What rule did you break? Joel, isn't that? It's a tick, right? It's a tick difference. We're areas. Joel, you have odds favorable. You're a tick or two off, same as Jose. You don't have divergence. You're right there. You take quick profits and you get to break even. Joel, this is perfect. Holy smokes. If you didn't break your rules, how does saying that you broke your rules make you feel? Joel, this is a perfect trade. I want you to embrace the idea that you might be good at this. All right, Jose, what are we doing here? Momentum trade, good bottom every chart, odds favorable. Pull back to the mid-band, you take the entry, there is no divergence, and it comes up to the mid-band. And that was your target, right? That 25 area. Not sure I would have given 7 back. Because from a good bottom, Jose, that mid-band's your first target. Nice trade. It's just not a home run trade, right? Good one. Little different, not high probability. Taking advantage of a strong termination condition. Strong small triggers. Strong small triggers. It's just a quick get in, get out. Nice job, Jose. Whoops, same one. All right, Gary, what'd you do? Gary says 50-50 with 2 divergences. He's not interested. And it's also a 50-50 from a bad bottom. I think we talked about this in the moment. From a bad bottom, 50-50s are less likely to work. Multiple divergences from a bad bottom, only compounding the fact that this area hasn't broken. Gary, great read, great patience. And then you posted here, termination conditions, don't have odds favorable. I'm not sure what you were looking for there. I think you came in and said that you annotated the chart. Let me get down just a couple clicks. Maybe not. We'll find it. Jose, entry at resistance with a limit order. Trying to trade from the edge, from a good bottom, back gap effect. So Jose, do you have rules for an edge trade? And I ask, because typically, historically, Jose, an edge trade, so let me give you a little help on this. When you're looking for an edge trade, the 21 must be odds favorable and clear in the direction of your trade. So if you're looking for a long, this should already be established odds favorable momentum in the long direction. Otherwise, what you're doing is you're just counter trend. You're hoping that this blue line holds with the triggers down, with the smalls down. Does that make sense? Your 8 range is down. Everything says down, really. Your large triggers are down. Your smalls have rolled. I get the gap effect. Let that 21 and write rules. But 21 odds favorable momentum. So Jose, if you go back, and I don't have a 21, but go back and look at, where's like a good edge trade? When you see this scenario, everything is screaming down and it pulls right back to resistance. Jose, this is where the 21 is odds favorable momentum and clear path, and you're just identifying what's really nothing more than a high probability or a higher time frame trend trade. Does that make sense? So think of your edge trades as a trend trade coming from a higher time frame. So let the rules be met on the 21.3, and let your area be a 13.2 area. Yeah. I like that you're going for it. What you're really looking for here is more of a, you're hoping for the market to continue from that great termination condition, right? Let these roll a little bit. And this is where you would use like a high volume area trade. You're really looking more for HVA here than you are edge. Great pictures though. Guys, you're putting some great stuff in here. And I think that there's a lot of really cool chart reading coming out of it. So thank you. Oops, I scrolled back too far. I do that sometimes. Gary, we've got one from you here. Let's take a look. 50-50 from a bad bottom. Divergence, didn't take it. Third divergence, didn't take it. And man, now it's just sliding stuck in that area. I love that you just said nothing but junk. I don't have an advantage. I'm not taking it. Bobby T. 50-50 from a bad bottom. Divergence prints. You choose not to take it. How easy is that, right? And Bobby, that's probably the one that screamed to the top, right? Just to get you to break your rules. But guys, isn't that easy? I have a 50-50. It has divergence. It's not my trade. Doesn't matter what happens next. Just doesn't matter. Great job, Bobby. Good job following your rules. It's hard to do sometimes. Gary, 50-50 from a good bottom. Divergence prints, and I feel like you're looking for market flow signal. Just waiting for that signal, right? Didn't get it. And then the short trade that you didn't share. The HVA back into a termination. You guys think I don't see these, but I do. I see everything, guys. And Gary, 50-50. You get your market flow confirmation. Great job waiting on that bar. Great job waiting on that confirmation bar. Oh, I've done that. Have you been studying those signals, Gary? Solid. And then you got in at the high volume area of the bar, so you even got a better fill. And now your risk is already established. I love the way you took that trade, man. Nice job. Guys, remember to celebrate the small victories. When you're like, holy smokes, I not only learned this lesson, but I was able to apply it. Use it. All right, Bobby, let's see what you got. Bobby, first divergence, right? This is taking yesterday's look, right? They gave divergence, pulled back, came up. And now it's coming back again. Bobby, the difference on this one, and let me know what you think about this. Not even going to look at your 8 range. That was your entry, right? Does this make sense, Bobby? Really for everybody. This was a 50-50 with divergence. It came back to the area inside of favorable large triggers. And then it went in the direction of the trade and it gave you a reversal bar and failed right there at the small triggers. And now it's on its way back. That 50-50 already tried to work and didn't and couldn't. And this becomes kind of that sketchy. But because you're coming from a good bottom, I don't disagree. But it's a pullback with divergence. Like if divergence printed here, if something happened to negate that, cool. But this one's still in effect. But because you're coming from that strong bottom, it certainly increases the odds for success on this one. And we had that trade yesterday, right? Where it printed divergence, but never hit the areas, right? Never gave an entry and divergence printed against it and it pushed back up and then it created the next pivot. This one came to the entry area. This one gave you an entry and it didn't follow through. And then if you waited for the market flow signal, even that one. And guys, there's going to be times where it's not 100% clear, where you've got to ask yourself, is it met? Is it not met? Are we good? Are we not good? And there's going to be little nuances here and there that you see. Gary, 50-50 with divergence. I think we already saw that one, right? Yeah, we did. Guys, sometimes I scroll back too far. All right, Jose, let's see what's going on. You saw that as the next high that didn't hit divergence, and I don't disagree. I probably would have read it the exact same way in the moment. And it was a strong bottom, Bobby. That great bottom. Was it 50-50 in the moment, coming from a good bottom, no divergence? Jose, not my best look on a 50-50, but since it's not, I love how you did it here. Strong triggers, no divergence, little window of opportunity. Jose, this is great execution. Because you gave up a little bit here, you didn't give up anything here. Nice trade. Nice trade. Gary? First divergence, you take it with market flow confirmation. Nice trade, Gary. Odds favorable from a good bottom. Guys, what a great setup. Beautiful execution. And then Joel. Odds favorable, didn't quite reach it. So you get in at the area, you take your first target, second target. Joel, great trade. Ron, everything says up, nothing in the way. Why not make some money? Beautiful trade, Ron. Consistent. Same trades you show me every day. Every day. Jose. So your termination condition was here, right? The one-to-ones. I love this look because look at the, Jose, you're like 4 ticks off here. Never run. Jose, that's a pretty good gap. You're getting close. But I'd say that's not there, right? And these one-to-ones are a little more exact. And let me show you why I say that. Whoops. So we talked about how the fibs are built, right? All those areas. Jose, are you with me? How's a one-to-one built? Guys, a one-to-one is exact science. A one-to-one is in the moment. It's A to B, C to projected D. It's a 100% Fibonacci alternate, and it's a very exact measurement that's happening in the moment, guys. That's why your one-to-ones print. So Jose, when I don't reach a one-to-one, especially with that much space, I love this trade. That's an odds favorable 50-50. It is divergence, right? You chose to take it with divergence. But it worked out based on momentum and that great bottom. Good job. But do you see how the two might be a little different? The one-to-ones are exact and in the moment, right? Based on those swings that just happened. But the fibs are a culmination of like a bajillion calculations. And a bajillion is a technical term that we use. Great trade, man. Miss Debbie, everything says up. So you take an entry a little bit low. Are you in at the area? You're in right at the area, but you let it start back up. Nice trade. Everything says up and you're holding for a little. I hope it made it for you. Nice trade. Can I ask, Debbie, and it's just from a management plan, why so much risk? Why are you willing to give back 7.5 points with weak triggers? Are you holding for bigger moves during the day? You're cool with the retracement back to areas? Bill's playing with strategies. You hate this one? This one gives me heartburn. But the flip side is that 21.3 says you got a pretty good shot of making it to the next fib. But the 21.3 is, you've cleared everything. So you do have a clear path on the 21. That's tough. But he's giving it room to bounce. But he is giving it room to bounce, right? His stop is still back where the market shouldn't go. Guys, some people hold for bigger moves. That's okay. You've got two targets. Yeah. It's interesting that he's got two stops, though. That's what throws me off. It's like I'm okay to get out for one, but let me hold and lose more on the next one if it turns against me. But just like everything that we do, large chart leads the way, right? Large chart dictates. All right, Alan. Look at all this. High probability trend trade. There's that same one Jose took, right? It's a 50-50 from a great bottom that hasn't reached the problem spot. You do have two divergences. It's supported by the momentum and a good bottom on the 21 as well. Great entry. And then you had an alarm for 10:30 news. Alan, was it yesterday's alarm for crude oil inventories? Because I don't think we had news today at 10:30, did we? You had natural gas storage. Okay. That's fair. I like everything about it. I think you took care of it, right? 50-50 rules work. You ignored a 21-3 termination condition. Good bottom, strong trend. Ignoring your rule about the 21-3. Great job with the analysis too, coming in and really picking out what you did and didn't do. That good bottom, guys, strong tops and bottoms makes such a difference. And then odds favorable momentum with a good bottom. It's hard to tell where you got in, Tony the Tiger, but it looks like it was before. Looks like it was a 50-50 that hadn't hit the fib. That's the one everyone else took. You took the entry and bring it up to the target. Nice trade. Yeah, it was right here? No, 10-14. I'm a little muddled, so I'm trying to put, your entry was at 23. 23 looks like the bottom of this one, which looks like odds favorable momentum from a good bottom that hadn't reached the 1-to-1 yet, and you take a rock star entry. Nice job. Run termination condition creates odds favorable momentum, and you said, I will take just a little bit. Trig steaming, no big honking fibs in the way. Goal met for the day. Back to sim and practice. Ron, the other thing I think that I really admire about your trade is about your trading. And guys, once again, goals, right? Having goals set, knowing exactly what it is that you're looking for, hitting targets, and then saying, you know what, that's cool. I made the money I expected to make. I'm going to call it a day. All right, Jose, 50-50. 50-50, no divergence, perfect entry, quick management, break even. Oh my gosh, Jose could not have done this better. Perfect entry. Quick profits at the trouble spot. Don't give it back. I agree 100%, Ron. I'm a base hitter. Gary, termination, odds favorable. You're looking for a pullback to the HVA where the triggers roll. Nicely done. Same picture. Bobby T, termination, 50-50. That was your entry. No divergence, right? You've got a 5-1 fib there. And then that was your first trouble spot. And then that 50-50 pushed up a little higher. Guys, great pictures. We actually made it to the end of them today. So what happened on that 50-50? 50-50 prints, first target, first trouble spot. We've identified it. Get out, break even. Jose, beautiful, perfect execution. Great entries, guys. They create manageable trades. Termination pulls all the way back to those trigger lines. Gary, I don't know where your HVA was. You might have gotten in on that one. You may not have. Earl. Hey, good morning, Earl. I like it. Earl's taking a page out of Ron's book, right? Pivot, stop out at resistance. Everything's down. Everything's screaming. You get in when the area clears. And then, Earl, there's that momentum trade, right? It breaks, comes back to the 1-to-1s. Great job staying in place. You had that rules met. Quick exit at the fibs. Let them break. Hop back in. Hop back out. Quick money, quick money. Earl, great trading. Heads up chart reading. Oh, Gary, you were so close. Not your money today, right? Guys, this is going to happen now and then. You're going to have that perfect entry rules-based just waiting, and those sons of guns are just going to not come and get you. Or maybe they will. right? We had that talk yesterday. Just because the first push doesn't get you guys doesn't mean that it's over, does it? Are the rules still true? That's what you're asking yourself right now, Gary. Are the rules still true? Do I still have a termination condition? Do I still have my triggers rolled? Is that HVA line still at large triggers, angled in the direction of the trade? Or are they not true? Those are the only two options, right? Guys, how's that for a termination condition? If you ever had any questions about Fibonacci, it works. Guys, buy low, sell high. You know exactly where high and low are. Thanks, John Novak. Throws me off. Look at that too, guys. Look how far price accelerated away from the large trigger lines. Look how the trigger lines are still above the reversal bar marker. What are we looking at here, guys? I'm always worried about the vacuum, and I just talked about it, right, Michelle? Guys, when price accelerates away from these large triggers so fast and far, typically it's got to hit an area, right? It's got to hit a midband or a fib, the gap theory. But absolutely, when they don't follow, price loves to close the gap. What are you confused about? But I'm never worried, Michelle. Let me clarify on that. Worry would suggest that I have some sort of influence on the market. But absolutely. And where was the HVA, though? Up at those large triggers, wasn't it? The HVA was at 91.50 at the large triggers rolling. Where were the large triggers over here? Oh my gosh, 91.50. It corresponds with the gap theory, doesn't it? Do you see how magical that just became, Michelle? Not only did your rules line up for a potential entry, but they also satisfied that gap theory. That gap theory probably got you back to your best area. Tony, I don't have an 8 range. I'm just looking at Gary's. Gary has one right here. Gary's HVA is at 91.25, right? Which means that if this little bounce didn't change his ideas, he's probably short, probably has a couple ticks of risk, and he's looking for the market to make it back to his first target. So, Tony, sometimes on the 8 range, are you on 8 or 7? Because one thing that I've noticed is my 8 ranges never look like John Novak's. Between 7 and 8, they're a little different. Trade your charts. But Michelle, did that make sense? It accelerates away, right? So I'm not worried. I did say it looked good for an HVA, cool. But that HVA lined up with that gap theory being satisfied. That's pretty amazing when that happens. That's just one more factor, right? So guys, what's the gap theory? For those of you that are sitting there going, man, he keeps saying gap theory, and I don't know what he means. Guys, the gap theory says that when price pulls away from those synthetic triggers too fast and too far into a Fibonacci area, it typically snaps back to the triggers. And all it is it's gauging. When it accelerates away and those large triggers don't follow along, guys, it's likely to close the gap back to it. And it's not necessarily a trade. Like, we're not trading the snapback. It's just a pattern that lets us know that any longs in between this point and those triggers can get run over. No, the triggers, when it says synthetics, I don't like the wording there. When it says synthetics, it's talking about the 13-2 large triggers. Because on the 5-1, we call them the synthetics. It's the large trigger. That's all it is. So when price accelerates away from those large triggers, the large triggers don't follow, price is likely to close the gap. Yep, but when you take that large trigger and you superimpose it onto the 5-1, that's your synthetic trigger on the 5-1. Does that make sense, Shogun? And why do we call it synthetic? We call it the synthetic. No, we don't do anything, Shogun. You trade when the rules are met, right? No. There is no fulfillment of the gap theory. Shogun. No. I'm going to boot you from the class. Not really. We're having fun. When it doesn't follow, you ready, Shogun? Do you know what it means? It means that anything between here and here, if you try to go short, typically gets run over. Does that make sense? This isn't a pattern to get you into a trade. This is a pattern to keep you from taking a trade prematurely. Yeah. So there is no, so we sell the synthetics or we buy the mid-band or anything. This just says, hey, Shogun, guess what? If you try to go short right here, you're probably going to get your butt kicked. Same with that one, and that one, and that one. When do you trade the gap theory? Well, that's an advanced one. Remember when Jose was talking about taking edge trades? If the 21-3 is odds favorable, if the 21-3 has a clear path, and let's say that all the areas line up with everything screaming in the direction, and price reaches support, and these large triggers are way up here, Jose, that's your edge trade. Guys, this is just a phenomenon that keeps you from trying to jump in at this mid-band, right? This is just a phenomenon that keeps you from not trading areas or a lack of areas inside of favorable large triggers. Shogun, do you see how the rules were never met for a trend trade? Does everyone see that? The rules were never met, right? And what do we have now? Gap theory said don't try it. If you took the HVA, it didn't work, right? They have other plans. You took it. That's it. Follow the rules. And Jose, on an HVA trade, right? You're in at the HVA, the down bar. You should have had 2, maybe 3 ticks of risk. Man, Jose, I would take this trade all day long because of this termination condition. The market just had different ideas. But that's a textbook. The only challenge that it has is the large triggers are flat, but even that's not a big deal. Man, that's the look, Jose. I'd take it too. I think you did a great job. And it just didn't work, right? So now what are we doing, guys? Where are we at? Smalls above the large. Larger wide, angled in the direction of the trend. Just next. I agree 100%. We're 50-50. Let's talk split triggers real quick. And Michelle, you were asking about split triggers earlier. So let's look at this look. When your large and your synthetic are not trending one on top of the other. I'm not saying that there's a trade to be had. If I go from the top of my large triggers to the bottom of my large triggers, do you see how, guys, because they're split, I have 2 areas inside the synthetic. I have 1 area inside of the large. And it's almost 2 points. It's almost 8 ticks of a window. When you talk about split triggers, guys, it makes your window of opportunity larger. Which means what? Which means that if you get in at the top of the window, you have potentially more risk. Because if my stop goes where the market shouldn't at 91 and I'm in at 94, that's that full 12, right? Maybe even a little more outside of those large triggers. Does that make sense, Michelle? And that's why we talk about that odds favorable. And now from 92.62 to 94, we're about a point and a half, right? But we've got strong triggers. Whoops. Now we have strong triggers. We have no terminations, right? And now we can identify that top of the window. And even though the trigger lines are split, do you see how small the window still is? Is that acceptable risk for this look? What do you think? Pretty cool, isn't it, guys? Just if-thens. If-thens. Shogun, not one mention of bulls or bears. This is what you call a pre-trade picture. When you have that limit order out there and you're waiting, take that picture, right? Put your checklist on it. Am I coming from a good top or bottom? I'm not, right? I'm not coming from a termination condition that creates a full reversal. But I do have odds favorable, and I do have a clear path, and I do have an entry inside. And guys, if my checklist is my trading plan, well, then it's my job to respect that trading plan. I like it even more. There's no divergence potential on the 5-1 right now. Give me a Y in the room, guys, if you see what we're doing here. Not calling trades. I don't care if you guys get in or get out. I'm not telling you to get in. I'm saying that if your plan says that you need odds favorable momentum, no termination conditions in an area inside of favorable large triggers, you have to make the determination whether or not your rules have been met. And if your rules have been met, guys, make a contract with yourself. If my rules are met, I'll take every trade. I won't take it with an opinion. I won't take it with fear. I won't take it with anxiety. Either my rules are met or they're not. And if they're met, I'll take this trade. And if it's a high probability trend trade, I know that if I take 100 of these trades, John in Alaska, how many are you likely to lose? If you take 100 trades that look just like this. Chris T, Shogun, Muhammad, 30. Are you okay with that? Are you guys okay with winning 70%? Did you know that you can win about 30%, and if your winners are twice as big as your losers, you can still make money in the market? Isn't that crazy? So what's the flip side, guys? What's the other side of that coin? Having all the advantages? There's a trust factor, right? If this market pulls back and stops you out, does it mean that the rules don't work? Does it mean that the methodology is flawed? Does it mean that this isn't a trade that you should be taking, or does it mean that you have a cost of doing business? Guys, I go into every trade, and this is true, and it took me a while to get this way. I go into every trade, and I couldn't care less if it wins or loses. The only thing that I'm concerned about is whether or not I followed my rules, whether or not I followed my plan. Guys, give me just 1 second. I'm going to mute you for 1 second. I hadn't had a down day in 4 years. That's impressive, right? Have you ever looked at Janesh's trades, Chris? They all look the same. Every one of them. Every one of them is rules met. Janesh has a plan. Janesh has a trade journal that he writes everything down and comes back and studies each day. But let me share this phrase with you guys, because this is the one for me, honest. This changed everything about how I trade. When you stop expecting to win every trade, you're going to start winning most of your trades, guys, because you're not getting caught up on the fluctuations. You're not getting caught up on anything. And more than anything, you realize that you have zero control over the market. What you start caring about is whether or not you followed your plan, because your plan has been proven to win more than it loses, because your plan is based on study, right? Your plan is based on execution. Your plan is based on simulation. Your plan has proven to you that if you take this setup 100 times, it's probably going to win 70 of them. Whoops, I just got kicked out of Discord, I think. It's probably going to win 70 of them, and it's probably going to lose 30 of them, and you don't get to pick which 30 lose. You don't get to pick which 70 win. Can you guys hear me? Yeah. Every now and then, Finn, man, it kicks me out. I don't know why. I made somebody at Discord mad. No video coming right now. Sorry, I was working on that audio. Here comes the video. But guys, does it make sense? If for some reason your trades don't win more than they lose, go back and look and make sure that you're following the rules. And this is where I come in. Sometimes you think you followed the rules, right? Sometimes you think you took the perfect trade. You think that you had every advantage, but you made a mistake, and that's okay. That's part of the growing process. How are you going to know if you don't post it in the room, if you don't ask those questions? Guys, it's imperative that you get that feedback. Can't stress that enough. That's the S&P doing its thing. What's crude oil doing? 50-50. Doesn't work, right? Gives you a chance to manage out. Pulls all the way up to resistance, guys. 1-to-1s, no trigger lines broke through. This is where I always ask. Which one of you said, to hell with it, I'm going long at the mid-band, even though there's a termination condition? Somebody did. That would have been me 2 years ago. Who said, this might be the one time that termination conditions break, so I'm going to go long right into it? Because, you know, I hope. Anybody? Good. I hope nobody did. Didn't matter that the background was green, right? Didn't matter that you thought you had odds favorable momentum. Didn't matter that you really wanted to make that money. The rules weren't met. You chose not to take the trade. And guys, once again, your rules kept you out of trouble. I love it. What a great way to reinforce rules, right? Again, Gary, you lost me. Did everybody lose me or just Gary? Can you hear me? So, Tony, we're good? Let me type in that it might be Gary. Cool. We'll let him know. You got me back. 5 by 5, right? So, guys, let's talk about advantages. Let's talk about the path. Let's spend every day focusing on the best of the best so you can get to where you want to be, right? And Debbie, you posted one. Let me get into it. Let me get off my soapbox and look at your picture. All right, so you had weak triggers, right? Let's just break it down. Weak triggers and the weak triggers create a bigger bounce, right? Does that make sense, Debbie? Weak triggers on the 13-2 coupled with divergence can create a bigger bounce. And it bounced all the way up to the mid band. It bounced all the way up to 1-to-1s. But look at this, Jose. Odds favorable in a clear path. This is just a higher time frame trend trade, isn't it? So great stop placement. It's a big stop, but it's behind the areas that should hold. Of course you did. Look at that momentum. Isn't that beautiful? So Debbie, all this is, and I love this, and this helps me with entries sometimes. Same strategy as today. Whoops, I just ditched your picture. I apologize. Let's pull it back up. So Debbie, this is a great example. This is a large chart, 21, leading the way. That's all it is. And then because of the odds favorable, because of the no termination conditions, you take the trend trade, which I like, and you hold it. And then Debbie, one of the things that I find really advantageous when the 21 is screaming with nothing in the way, but you're losing momentum, it doesn't always happen, but see how you got a pivot stop out right at the area that you're expecting to hold? I love this entry with this look, Debbie. Maybe it's something you can go back and study. When the 13-2 is the best of the best look, or the 21, that's just the way she has, it looks like her mid-band set up. Looks like it's her mid-band from the 21 chart, if I'm not mistaken. Just a little added in there. Didn't need it for the trade. But if the 21's coming from nowhere, you expect it to pull back to the mid-band, right? That mid-band lines up with a mid-band and 1-to-1s, and it lines up with a pivot stop out. Isn't that pretty cool? And you like to see the mid-band cross? Great trade, Debbie. It's a good read from top to bottom. It's taking a higher time frame and making decisions on stops and targets in a lower time frame. Guys, that's solid chart reading, right? And it's the same concepts that we talk about. It's odds favorable momentum. Gary, if you're not sure, then it probably isn't, right? If those small triggers are just eking through, it's probably not. The first trade after the cross is what you're looking for if the conditions warrant. Debbie, are you suggesting that you have a plan? Successful traders do, don't they? Great job. And guys, I don't know if I say this enough. I appreciate you guys that post in this room. I appreciate you guys that put yourself out there, make yourself a little bit vulnerable, talk about your winners, talk about your losers, right? Ask for help. A little bit of overrun here. Man, it's great. Y'all's pictures drive the class. They really do. So I'm going to take a few minutes, guys. Jose, when I come back, yours will be the first one. And we're going to get into this last 30, 40 minutes, guys. I want you to lead the way. I want you guys to tell me what we're talking about. Ask your questions. If you're brand new, you should have a million questions. I hope you've realized at this point that this is a pretty safe area. You can ask whatever you want. You can do whatever you want, guys. If I say something that doesn't make sense, we'll work together to make sense of it, right? Rain saved my bacon today with a little bit of clarity on the checklist. Send him a Coke and a candy bar later. So, guys, I'll be back in a few minutes. When I come back, we're going to finish strong. Think about what you want to talk about. See you guys in a few. something every day. If you are on demo,